All righty. Good morning, everyone. Welcome to Trading a Smaller Account and welcome to a fresh new week in the markets. Although the markets haven't been feeling very fresh lately or very new, perhaps. I thought I'd start, today's topic is going to be trading in times of trouble and how do we trade in times of trouble or uncertainty. And it's kind of like that joke that is funny, not so funny. How do you hug a porcupine? Very carefully. And so, we need to be very careful. We need to be strategic. And, we want to avoid, getting lambasted with a lot of darts that are going to deflate our account, right? Right. And so what are we going to do in this next 45 minutes that we have together? Well, we're going to do a lot. We're going to look at placing 3 new example trades. All of them will be on the bearish side of the street. We're going to have a quick look at the S&P and the NASDAQ and the VIX, but I'm not going to spend a lot of time on market overview. Kevin Horner does a beautiful job of that when the market opens at 9:30 Eastern. You can go back and watch his Trader Talks for more details on that. We have 2 iron condors to review. We have 2 trades with targets that we're going to have a quick look at. We have 3 trades that we did conditional orders on Friday, and we're going to have a peek at those also. And so that is a lot. So I hope you guys are buckled up and ready to roll. My name is Barbara Armstrong. I'm a coach with Schwab. If you are not following me in the land of X, I invite you formally to do so. It is another free resource and a way for me to be able to communicate with you outside of webcasts like this. We also have Cameron May with us in the chat. He's a fellow coach and he is also on X. So please feel free to follow Cameron as well. Cameron May CS and Barbara Armstrong CS. Okay, so just before we get into the thick of things, know that options, and we do a lot of options trades, particularly when the market is bearish in this trading a smaller account class. Know that options carry a high level of risk and aren't suitable for all investors. Know that we use the Paper Money software application on the Thinkorswim desktop platform, and it is a brilliant place to learn. Make sure you understand your trading strategy and how to implement that strategy on this platform before you consider trading it in a live account. There are some nuances and differences. One is that short options will never be assigned early in Paper Money, although that can certainly happen in a live account. This Thursday and Friday, I'm going to be in Chicago. Why is that not on this list? Well, because it would, kind of mess up the Triple D thing we have going on. But this weekend is an advanced option workshop in Chicago on Thursday and Friday. It's actually in Schaumburg. Registration for that event is now closed. If you live in the Chicago area and show up, we can register you on site. But I say this to just reinforce that if you live in one of these areas, Detroit, Dallas, or Denver, and you're thinking about coming, I would register sooner rather than later before your registration ability is gone, before it is maxed out. And we can only get a room so big in many of these locations. And so I loved attending live events as a client, which is how I came into this business. And I love them still attending as a coach. So if you've never been to one, check it out. If you have been to one, I have my chat sitting down here, feel free to type into the chat what, how you felt about it. But I found them to be really powerful, and they really helped accelerate my learning. So there's my plug for those. And I love going now because it means I get an opportunity to meet with all of you and to help you accelerate your learning. And I think there's tremendous value in that as well. Okay. So on with the show. So here's our S&P 500. And I don't know if any of you guys ever did this when you were a kid, that, you pick a daisy and she loves me not, she loves me not. Well, today, the market, it's been up, it's been down, it's been up, it's been down. And I feel like on the she loves me not wheel of decision making, there's been more she loves me not lately than she loves me with respect to the S&P 500 and the bulls. And you can see here, we were officially down over 10%. We've now, shaved 2% off that. But some might look at that and say, yeah, well, Chicken Little has not gone back into hibernation, because she's looking at this and seeing this potentially as a bear flag. And others might say, hey, me thinks this is the bottom. Well, you can think whatever you like, and I'm not saying that anyone is right or wrong, because when will we know? Well, when we go forward and we see, what actually happens. I'm just trying to bring up my drawing tool here. So some might see this, and if it continues to go up, but as of now, we still have a lower low and a lower high. And so we'll just have to keep our eye on it, right? Right. Yeah, I don't think that, yeah. Somebody said, I'd like for Chicken Little to be going to roost. I don't know if that meant I'd like to shoot Chicken Little and roast her. Yeah, I don't think killing the chicken will solve the problem either way. And the NASDAQ, do we see a similar pattern here? And from our recent high on February 19th, those days seem long ago now. It was down 14%, now down a mere 11%, but either way, correction territory. And, when I'm doing that, she loves me not. Well, we can see we've gone back and forth on the she loves me not thing on the NASDAQ today as well. And right now we're in the not category and that we're down, but just a smidge, like we could be up, if we look at this again in 5 minutes, like, who knows? This seems to be another year of whiplash. I'm not sure if I'll be attending the Dallas event. Yeah, I'll let you know as soon as I know. So and I'll post that on X once I know as well. Okay, and here's our VIX. It's continuing to fall, which is interesting that it's falling, fairly dramatically today, when on the the S&P and the NASDAQ, we're seeing kind of more candles of indecision. But this is a bullish sign here if we want to look for bullish signs. But we're still above 20, and that's kind of closer to the nosebleed section than not of where we've been in the last year. If I move this line to 20, we've certainly spent more time below it in the last year than above it, right? Right. Okay, so let's move on and let's kind of go back and forth between our little trade management, and it's not little, it's really important, because, half of your success is knowing when to get in, or just a portion of your success. It's not 50% per se, but, a portion of your success is understanding when an opportunity is there and taking it. The other part is knowing when to exit. And so when we look at, I had 2 stocks with targets we wanted to look at, and seeing as they're sitting right here, let's have a look at those. We're up on both of those, Travelers and XEL. And so when I look at that, I think, are we close to our target? Now, this target on Travelers was based on the width of this pattern. And we had, we're on our way. So it kind of pulled back. It looks like we're on our way. But if we get a candle of indecision, a doji or a hanging man, might we choose to just take the money and run? Absolutely. And that's why I looked at this today. But right now, like, we have, 3 very bullish candles in a row. And so we're just going to let that continue to percolate. We'll look at it again on Wednesday in our trading price pattern class, since I will be not teaching the getting started with option, or trading a smaller account on Friday. Now on XEL, we placed 2 trades, again, based on this kind of cup and handle or sloppy inverted head and shoulders type pattern, where it was breaking above this support level, and it went up and hit the 1 ATR target. I think we did a long call very quickly, and it came up close but didn't quite hit. And we obviously didn't have our eye on the ball, or we might have chosen to exit here. And it came all the way back and is moving up again. So we'll just keep our eye on this. And one of the advantages of owning a stock is that we don't have to worry about time decay, but we still are tying up resource. Okay, so that's our 2 trades with targets in, and our response to those is we're just going to let those percolate. Now we also had 2 iron condors. So let's come up to the iron condor section. And let's talk about Micron first. So Micron, you see we have this little earnings thing here. This expires on March 21st. When is earnings? Earnings is the day before. And so we had this conversation with ourselves when we placed this example trade, and we said, hey, we are going to exit prior to expiration no matter what. And so we do have a nice profit on this. We were hoping for this profit to be higher, but we're up $111. Now, more of that profit has come from the put side than the call side, but we're up on both. And because earnings is coming up on Thursday, prior to expiration, we're just going to exit these 2 positions. And so I'm going to come over to the working orders and come down just to make sure we have nothing on Micron. And this is alphabetical. There is no little chiclet beside these positions, saying that there's a sell order. So we're just going to right click, create a closing order to buy this back at 28 cents. Okay, so we're going to close that out. I just checked on INTC today. So somebody's asking if I'm interested in INTC. And I can answer that in a second. Okay, so we're out of that side. Now to come up to the call side. Now, had we exited this a little earlier, you might have thought that we would have made more money, and it is possible, but volatility was so high, it actually, we wouldn't have made as much as we would have anticipated when we placed the trade. So we have a small profit on this. We're up 12%, and we're just going to take it. So we're going to take that money and run, so to speak, to cue Steve Miller. Yeah, so to answer the question on INTC, and I took it off the chart, but with INTC, we had placed a short call vertical trade that we were going to leg into an iron condor. That was the intention. And we ended up exiting that position. We hit our goal and we exited on the short call vertical side of it. And right now we've got it's been trading in this range since what, since August. So, we're going to keep our eye on this and maybe come back and look at this again on Wednesday. I'm going to make a note, iron condor possibility. So this is one that we might want to keep our eye on and maybe try to leg into again if after we have these, 4 big up days in a row, does it hit its head around this 2630-ish level? If it starts to roll over, could we do another short call vertical? Well, we could, but would we put it on today? No. Micron, how many contracts did we have? We had 2 contracts on Micron. Okay, now the other iron condor position that we had, so we're out of that, and we were up about $100, and I'm not counting transaction fees in that. So we exited that position because earnings was coming prior to the expiration date. In Dollar Tree, this is interesting. So it's saying we're down $58 today. This is sitting at $65.91, and we want it to be between 65 and 80. So when we come and look at Dollar Tree, and this is one that we've done a wash, rinse, repeat on. So this isn't the first iron condor. Okay, this is the one that's been trading in this range since September. And so if we wanted, this one expires Friday, we could come in and close out one side of it. So we could do that. And What's that side worth? Well, it's worth about, 2 cents. And so we could exit that side of it. And Dollar Tree, I just want to make sure that it's, that it didn't get misplaced. So we could come to the call side, because this expires Friday, and create a closing order. And you see, it gives us a lot of choices. So we could say, well, we'd like to close this call side 80 to 85. Although you might say, well, I just as soon let that expire worthless. Well, we don't let call verticals go into expiration. That's kind of one of our guidelines or our example rules. We want to close them out prior to expiration. So we might say, okay, 2 cents. And we're going to have to pay a transaction fee to close this out as well. And it's it's 65 cents a contract. So we're going to send that in and see if that will fill to close out this side. Now, this other side is being, a bit of a stick because it's trading just above it. And so we'll look at that again on Wednesday and we'll close it out. But if it goes up another day, then, it might be more profitable. We might have more profit to take from that side of the position. Okay. So that's what's going on with Dollar Tree. And that's our 2 iron condors. And so we've exited 1.5, of the 2 iron condors that we're in, or we put targets in. Now let's go and look at something new, and then we can come back and look at the 3 conditional trades that we put on Friday. Okay, so let's come and look at Reddit. So Reddit, it started at $37 and went all the way up to $230. Like, what a trajectory. But, lately it's been on the struggle bus, right? And, we've had this, trailing, and then it kind of went sideways for a bit. So it kind of paused to rest and then dropped down pretty decidedly and rallied for 2 days and then seems to be heading south again. So could we do a 1 ATR trade? And why might we consider a 1 ATR trade? Well, it tends to be a pretty short-term trade. We could also do a swing trade, and say, well, our low here on this day was 105.51. And so what if we looked at this and said, hey, it's sitting at 122.39 right now. What if we put in that target of 105.51? And, we could make it even 106, or 107. And if we made it 107, how much of a drop is that? Well, if you take 122 to 107, that's a $15 move. In an average day, this moves about $13.69. So, that might not take a long time to get down there. Now let's come and look, because this is a really volatile stock. So if we come out to April, the at the money strikes, it's at that's a $10 option. Well, we aren't willing to risk more than $500 on any one trade, and we could lose all of it. And so what if we came out here to 105? So we're looking at an out of the money option, which means that if this stock moves down $1, how much would that benefit us? Well, to the tune of 23 cents. The value of this option would go up by about 23 cents. Where if we bought the at the money option, it would go up by 42 cents. So is that not as good a deal? Well, when you think about it, if this goes up by 42 cents, if this goes up, this stock falls $1, this is a $10 option. So actually, we're getting just as much of a gain. This option costs half as much, and it's going up by 23 cents. So it's not as big a difference as you might think. Do you know what I'm saying? Are you picking up what I'm putting down there? I'm just looking at the chat here. Okay. Okay, so we're going to look at buying a put on Reddit. And we've got 31 days. How long are we expecting to be in this? Well, we're expecting to be in this, maybe till the end of the week. That's our expectation, is that it might move down, in the next 4 to 7 trading days. And so we'd want to be out before, it hits that last 3 weeks to expiration. Okay, so we're looking at just buying a single. And if we did this as a swing trade, we would come to single order. Oh, actually, if we did it as a swing trade, let me do this again. We are going to buy custom with an OCO bracket, and we are going to make this a market order that's good till canceled. And with a swing trade, our guideline is if it loses half its value, we want to exit the position. So if it gets to the point where it's worth 235, we want to exit. Okay. And then for the market order, we are going to bring up a conditional order and say, hey, if Reddit goes at or below 107, so not quite the recent low, but in the neighborhood of it, because sometimes things will get like so close and then they just miss it by like a whisker, by 15 or 20 cents. And so we're just putting it a little bit above that. And when we come to confirm and send, the stock trading at 121.62, how much could we lose? $470. It's saying how much could we make? 10,000. Well, we have a target in. We won't make 10,000. We're saying if it goes back to 107. And you may ask the question, well, how much could we make? Well, I like the way you're thinking, because I'd be thinking that too. And we can go to Theo Price and look at that once we put this in. And so that's a drop. We're going to put this in our long put group and say that this is a swing target. Okay, fire in the hole. Now, if we come to Theo Price here and we say, first thing we do is hit reset. And now we are on the trade tab. And we are on the option chain. Because the first time I saw this, I thought it was the coolest thing since sliced bread. Then I couldn't remember where I'd seen it. I ended up calling the trade desk. So we're on the trade tab, on the option chain, Theo Price. When you hit reset, it brings up today's date. And we're going to say, what if by Friday, and what's the date on Friday? Let me grab my calendar. Friday would be the 21st. Okay, so what if, and this is just an if, and this gives us a guesstimate. What if this fell by about $15? And we aren't going to change volatility, although we know that volatility's been kind of all over the place. So if it went, that would be 106.57. That would have triggered our exit, right? Right. So if we come and we look at this, what might this be worth? Now, notice that I use the word might. Because there's no guarantee, and it might not hit this by Friday. If it takes another week, this could be in a different place. So let me change that from pink. We'll go to, I don't have green, or I would have used green today in honor of St. Patrick's Day. So here's this Theo Price, because we brought this up, and Theo Price. So we came in here, this 105 strike, and paid somewhere under $5, might be worth about $8.90. in that neighborhood. And so we'd have a gain of about $300, on a $480 investment. Now we put a target in to lose, if we get out, if it goes down 50%, we want out. And so we're aiming for this kind of return for that risk of about 240. Okay. And again, there's no saying that we couldn't lose more than that, but this kind of gives you a bit of a guideline or a rule of thumb. Okay. Kind of a cool tool, isn't it? Okay. So that was Reddit. Now, could you also do a long put vertical on this? Well, we could. That's another choice. But if we wanted, sometimes we have the choice of doing a long put vertical or a long put, and sometimes that's harder to come by. So let me bring you to Adobe. So Adobe, even though this thing has been lately, since it hit this high back in September, it has been on the struggle bus, hasn't it? Like it is down almost 33%. And like it was, looks like it's been kind of a downhill wave, excuse me, for a while. And then it had its latest earnings and gap down. And, we saw this gap down, and then we saw this Harami pattern, which could be considered bullish. Now, could this be, a bear flag setting up because we have another, Harami saying and could this be construed as this is the high? This might be a new resistance level. And here's a bearish Harami setting up. And so, can we afford to buy a put on Adobe if we were bearish? And let's come to the trade tab. Well, we'd have to come way out of the money, and let's come back to, we'd have to come way out of the money, out here to this 365. And could we do that? We could. Do we have enough contracts? Yes. Does this trade more than 1 million shares a day? But might we also consider it's trading at 389? Geez, might there be enough premium? And this would be a conservative way to do this. Could we do a long put vertical at 400 and 395, or 395 and 390? It's already trading below both strikes. And if it just stays below, we'd have a successful trade. So this is a bearish trade, but it's kind of a conservatively bearish trade because our break even on this, even though we're expecting this to stay below 390, our break even is $2 and almost 70 cents above where it's currently trading. So I would say this is modestly bearish, and it just depends on where your strikes are. Sorry, I didn't mean to do that. So we wanted to do 395. We wanted to buy the 395 and the 390. And our goal on these is typically 50%. Now, if it's up by 25% in 3 or 4 trading days, might we choose to exit? Absolutely. But if we put this target in, and then our rule is that we exit if we're down 50%. So how many of these could we do? Well, we could do 2, and we're basing this on 100% loss. And you might say to yourself, why is she saying base this on a 50% loss? And then, she's position sizing as if she could lose it all. Well, because we could still lose it all. What if this gapped up dramatically? There's not a guarantee that just because we want to get out at a 50% loss that we will. And so we're trying to be conservative. And over the last 5 or 6 years in our example trades, when yours truly has stuck to those guidelines, it's tended to work out fairly well. Now, this keeps, when we first looked at this was at 230 or 235. So it keeps going up. So we're going to go ahead and put this in. We're going to put our target exit. It would be 375. Let's just call it 375. It's probably 380. But that's close to 50%. 375. We're going to make this good till canceled. Confirm and send. And this is a long put vertical. Okay. So fire in the hole. And we'll just see if that fills. Now, the guidelines on these are that we want to have more than 1 million shares a day. We want there to be a tight bid-ask spread, no more than 10%. We want there to be at least 20 times the number of contracts. And you may be saying, like, where are these guidelines of which you speak? And this is why you want to subscribe to the Trader Talks channel from Schwab Coaching on YouTube. There's a button in the bottom right corner. If you haven't already subscribed, you might want to do that. And what you'll see when you first come in is whatever is currently being taught or the next one about to start. But if you come to playlists and scroll down, these mini sessions, so look for kind of a turquoisey color. I've started this series, and when we get enough of them, we may break it out into its own playlist, but it's very short videos. They will all be under 5 minutes long on just different candle patterns. So this one's a bearish candle pattern, but here are a bunch of example trading plans. And one of these is the long put vertical trading plan. I also have one on long calls with a 1 ATR target. I'm going to record this week one on long puts. And I may do the long puts with either a 1 ATR target, or I may do a long put with a swing target, seeing as I don't have an example trading plan for a swing target yet. So somebody is asking in the chat, why not use a credit spread? And you know, I like the way you're thinking. You know, so could we come here and say, you know, here's this 400 level, or what's the top of that candle for Adobe? Could we come up to the 405, and maybe because volatility is still high in the market in general, could we come in to the call side? And, you know, we have a delta of 30 here on the 410, a delta of 36 on the 405. We've got volume over here also, enough volume. We've already confirmed that we have enough volume on the stock. We've got a 30-cent bid-ask spread. So could we come here and maybe do this 405 and sell a vertical? And we get $1.60 for that. And how many days would we be in this trade? Good question, because that's part of our analysis. So part of our example trading plan, and we do have a short call vertical example trading plan in there also. But, you know, at $1.62, we'd want to bring up our little calculator and say, okay, how much are we risking? Well, if we're getting paid $1.62, that looks like $3.38 is what we're risking. It's $5 minus the $1.62. And if I take $1.62 and divide that by $3.38, that's a potential 48% return on our risk for a trade we'd be in for 31 days. And our kind of rule of thumb in our example trading plan on those short verticals is that if we're in it for 30 days, we want to get at least a 30% return, and we're exceeding that. And so, you know, we could do a short call vertical on this. And, you know, if for those of you, if you're not familiar with this strategy, the idea here, when we do a short call vertical, we're selling a call to make our money. And this would be 405 and 410, April 21st. So we're selling a short call to make our money and then buying a call at the 410 above it to define our risk. And so there is a theoretical max loss, and that's that 358 that I referred to. But as long as the stock stays below 405, it's less directional. So, and we've got, we've got $15 worth of buffer between where it's currently trading and where we want it to stay below. And so let's go ahead and how many contracts could we do if we wanted to do this trade? Oh, look, did we just get out of that? Okay, I'll come. I don't want to get distracted. So said she who was just distracted. So we are going to put in, and in our example trading plan, and you might not want to put in a target, but in our example trading plan, we said, when we've got 80% of our max gain, we want to get out. Now, is this set in stone and thou shalt not break thy trading plan? In fact, we could make it 33 cents. No, if we're up 50% in a week, come Friday or next Monday, we might say, hey, we've only been in this for a week. We were, willing to be in this for the better part of 30 days. If we've been in it for 7 and we've got half our max gain, might we just take it? Absolutely. But so that is a guideline or a target that we might change. Now, what is a guideline or a target that we don't change? One of the rules that we don't break is our position sizing rule. Even if we've had 10 trades in a row that have gone swimmingly on short verticals, we don't say, you know what, I'm now obviously brilliant in the short vertical arena, so these trading position sizing rules shouldn't apply to me. Be very afraid if you start thinking that, because that's when you place a bunch of them and they all go wrong and you've blown up your account. Okay, so we're looking at selling a short call vertical. We're going to put this in our short call vertical bucket, and we're going to compare it to our long put vertical. Okay. All right. Okay, well, time keeps clipping along. I'm not going to talk about rolling an iron condor today. That was a comment that came up in the chat. What we tend to do in this class, because we have new people joining all the time, is if, for example, with Dollar Tree, when we exited the last one, we closed out that position, we took our profit, and then we placed a new trade. And when we roll a position, we're basically buying back the old trade and placing a new trade. And my litmus test on rolling is if I wouldn't place a new trade today, I wouldn't roll a current trade. We're not going to kick a loser down the road hoping to delay the pain. Okay, does that make sense? We don't kick losers down the road. But do we like that wash, rinse, repeat idea that rolling a successful trade can bring? Yes. But I tend to just close out the trade rather than putting it in as a rolling trade, just because we have new people joining us all the time. Okay. So what have we talked about so far? Well, we have placed 2 trades on Adobe, one a long put vertical and one a short call vertical, both bearish trades. We've done a long put on Reddit, which is a bearish trade. We've closed out our iron condor on Micron. And then down here, we opened a position on Tesla. Okay, so Tesla is a long put vertical that we had put a conditional order in on Friday. And we just said, the deal is if we get into this trade or when we get into this trade, so here's our long put vertical. When do we want to get out? Well, again, if you go to that playlist of the example trading plans, our initial target is to get out when we have half of our a 50% gain. So we're going to look at this and say we paid 220. So we're going to come down to our long put verticals, and Tesla is in here. And we are going to put in an exit and say, hey, when this gets to 330, we are going to exit that position. So what's the advantage of putting in a conditional order anyway? Well, we managed to get in right when the market opened, and we're now up 20%, which is a bit of all right. Where if we had just waited until we talked about it, we would have been getting in now, and then our target would have been much higher. So we're going to create a closing order to sell this vertical that we bought. And what are we going to sell it for? We want to sell it for 330. And it's a limit order. So unless it reaches a value of 330 or more, it won't sell. So is it going to sell right now? No. Well, that's okay. So that's our exit. And we're putting it in with the long put vertical group. So now when we come to the monitor tab and we look at our long put verticals, we now see I think of them as chiclets, where we didn't have one before. Now you can see that we have a long put on Delta and one on United Airlines, and they have zeros beside them and there's no quantity. And that's because they haven't filled yet. So when we look at Delta, we put in a conditional order because we said, hey, it looks like this has been falling and we've got this series of bear flags, right? And it's up today. And if it goes 20 cents below Friday's low, we want to enter. But this isn't a set it and forget it. And we put a target in on this one and said, hey, if we enter at 43.98, the one ATR is around 280. So we want to exit if it goes down by 280 or whatever that number was on Friday. And then somebody said, well, what if it gapped down and you end up in and out at the same time? So with this one, we don't have an entry yet, but might we change our entry if there is a new high day established? Yes. So we're going to look at this every day. Now, the other one was United Airlines, and United Airlines today is up. And so might we move our conditional entry up? Yes. And on this one, in a response to the question of what if it gapped down and you got in and out, we just put in an entry. And then when we get into the trade, we'll go in and place our target. Okay. And so if this were the end of the day, and let's just pretend it is, the low of this day is 72.80, and we were placing our entry 20 cents below that low. So our new entry would be 72.60 on United Airlines. So 72.60, because we have now a new high day. So I'm going to come and we're going to change this to 72.60, and we're just pretending that candle, that's the end of the day. And the more important one is we're going to come to our working orders. We're going to come down to United Airlines. And we are going to cancel and replace this order. And so here's our order. It's a market order. We're bringing up our conditional order by clicking on that sprocket. And we're saying, hey, if this goes at or below 72.60, we want to get in. So there we have it. Confirm and send. It's currently trading at 74.03. If it goes at or below 72.60, which is 20 cents below today's low. So this is a conditional entry target to be put in later. Once or if the order fills. And the idea here is that you want to be on top of it if it does start to fall, and yet you can save yourself from a losing trade if it continues to go up. Yeah. And so that's what we're attempting to do by using these conditional entries. Well, our 45 minutes, my friends, it has come and gone. I thank you for joining me today. And I just, as a closing note, here's where I can get a little bossy. If you haven't been to a live event, check it out. Up next is James Boyd. You'll want to stick around for that. He's talking technical trading, I think is his title, or something similar to that. So you'll want to stick around for that. Please hit the like button. It helps move this up in the algorithm so more people can find this content. It also lets Cameron and I know that you found this valuable. As Cameron likes to say, sounds like applause to us. Subscribe to the channel if you haven't done so already. And don't forget to follow us in the land of Twitter, Barb Armstrong CS, Cameron May CS, and now X. So have a really great day, everyone. We'll see you tomorrow for Getting Started with Technical Analysis. Bye for now.